Daniel, you can go ahead and get going.
All right. I always wonder if anyone like nopes out of the meeting right when it gives you that message. Oh, it's getting recorded. I'm done. Looks like we're all still here. So I get to lead this one on professional judgment, otherwise known as appeals. I'm gonna go ahead and share the not that screen. Let me try it again.
Daniel, you're a little low. So if you know,
hold your mini microphone together.
Eject.
My mini microphone.
Now you're louder. See,
I'll be there. Okay. Once I share the right screen, then I'll look the right direction and we'll be good. There we go. All right. So professional judgment. This is what we're looking at, and it's an opportunity to assist a family in crisis. I think professional judgment is while it's something that takes a lot of time working with a family, it takes a lot of energy and analysis to review lots of information. It's also a very important and significant time to connect with a family who's going through some sort of crisis, whether that in any number of things that we'll be looking at going forward. But schools do not have to offer this. They don't. We are allowed to just take what's information is given on the FAFSA, and if something different happens, then next year it'll even out because the the FAFSA is based on a different tax year each year. So we don't have to do this, but it is something that I think is a great opportunity for schools to be able to go in and meet a family where they are now, not where they were 2 years ago, and to be able to adjust to life circumstances. As we know, things can change. It's a very vulnerable time for a family to be asking for help. I know I personally am not one who likes asking for help in general at all in life. I think I can count on one hand the amount of times I actually went to a teacher to ask for help in my entire schooling career. But this is a very vulnerable time for a family to be able to come forward and say, things are not the same. I need some more help than I used to, or I need some more help than what the FAFSA displays that I have. So we have that opportunity because situations can change. The FAFSA looks back 2 years now, which is helpful in the fact that at least families will have their tax information done. So they're more likely to be able to use that. Tax retrieval, the IRS data retrieval on the FAFSA. So it will be accurate based on the information that is actually filed. But it's a long time since that tax year versus this tax year or this academic year. So we're looking at, and we all know that 2020 and the end of 2019 were very, very different years than what may have been in the prior. So 2020 may have looked very different than 2019 even. Situations can change. So we call it a PJ, or professional judgment, internally, whereas a family may call it special circumstances or an appeal. So they're talking to a family about how things have changed. This is they're not going to identify it as a PJ. They're going to say, I need some help. So there are some pieces of this where some things are considered more of a correction to the FAFSA, and some things are considered more of an appeal. So a correction can be if a student gets married after filing the FAFSA, and if they were perhaps dependent before, and now that they're married, they can be independent, and just looking at their spouse's income. That is actually a correction. It's not an appeal, because it's something that is certainly a big change and can make a difference if the student would like to pursue that difference. But it's they don't have to go through all the appeal forms. They just turn in some correcting documentation, or can make some updates on the FAFSA themselves, and then we just confirm it. So that one is a correction. identifying IRA rollovers. So there are times when a parent or a student would be moving funds from one IRA over to another. So where this could happen is if they are changing a job and they're moving from one kind of retirement account over to another one. It shows up on the taxes where it kind of looks like this big influx of funding. But if it's a rollover, it's just moving from one account to a different account. It's not being pulled out and used for expenses. Then that's something that really can be excluded. That is a correction, not an appeal. So, and we'll look at the difference between that and some of these one-time income things that we'll look at it a little bit. Those two are fairly common and can come up as corrections. There are some things that we don't consider an appeal or are eligible for appeal. If a family is also paying for private school tuition, so maybe the student that's coming now is the oldest, and there's 4 other kids who are also in some sort of private school, whether that be elementary, middle, high school, whatever it is. We do see that as a choice, and often with these appeals, we are looking at changes of income, changes of household status. It's not usually about expenses. There are some things we can do with medical expenses, but a private school tuition, which is a choice for their family, for other children in the family, is not something we consider for an appeal. One-time income that's used for an educational expense. So that could be maybe last year they pulled out some money from their 401k to help cover the costs of education. It's hard to say in an appeal that, yeah, we did that last year, but we'll never do that again. So it's if they're using that as a resource to cover educational expenses, then that's really not an appealable situation as well, because if they used it once, they're seemingly likely to be able to use that again then. All right. How this professional judgment or appeal process works. It starts with the family. The family indicates some sort of need. They're working with an advisor. They're looking at the aid they've been offered, and they believe that they have more, that they're not going to be able to make it work with what's been offered at this point. So what else can they do if their situation is different really than what was initially filed on the FAFSA? Then what can they do? So the family indicates that need with the advisor, and then the advisor can help guide them to the correct form for their situation. So we're looking forward, and we're going to walk through each of the new forms. This year we did split it out for at least the traditional undergraduate forms. We split it out into different scenarios because it's a bit of a different focus depending on the reason for the appeal. So we did split it out into different forms. Last year we made multiple changes on our appeal forms, and we've been trying to fine tune to see what's the best combination. And last year we added a lot of different questions and detail into that appeal form, and it didn't seem to be as clarifying as we were hoping it would be. So this year we are trying this, for this coming year, we're trying this split out forms to really hone in on the specific scenario the family has and to really get the documentation needed for that scenario. So as we go through those forms, we'll see what that looks like. So family indicates that financial need. They work with the advisor to find the form. The family puts together the information needed as guided by that form, submits the information. Our first line of defense for that, at least on the traditional side, is Martha to review what was submitted. And she does a great job comparing what's needed on the forms, looking through to see if it's complete, and tries to make sure that the complete information then is submitted on to the financial aid officers for review. We've worked very hard on that process as well. It's in these complicated situations, it can be hard to make sure that everything is all together in the first round. We're trying to avoid this kind of back and forth where family sends us a part of it and we go and review it, but it's really not enough information to make a good decision. So we go back and ask for more, and that just draws out a process a long time. So we're trying to make sure that the forms are clear, that the first review by Martha is clear, and then so once it gets to the financial aid officers, they can make an assessment and move forward without requesting additional information. That is the goal. We're certainly hoping to be able to make a decision based on the information that's provided rather than going back and forth in an already challenging situation. So once that information gets to the financial aid officers for review, the FAO would assess for completeness, make sure we do have everything we need, and what impact it could have on the student's aid. After assessing that impact, would make applicable changes and respond out with a response about the appeal in general, saying what was done, and hopefully a revised award letter if it can result in additional aid. So that's a piece that we're looking at now as well, where and we'll look at a couple situations where there may have been a big change in the family, but that may not necessarily result in additional aid. So and we'll look at why that happens. And I think we'll save till the end to have some of that discussion as to what really is the best response to a family then, if we see that even after what they've submitted, there's not any additional aid that a student is eligible for. And sometimes that happens with appeals. So that's we want to be able to communicate back to that family in as positive a way as we can, that yes, we acknowledge what's happening, but unfortunately this does not result in any additional aid. Sometimes that happens. So I think we're looking to partner really to see how to best have that messaging, if that's better for a phone call or if that's better for a well-scripted email to go back to the family. So I wanted to look at a couple situations or scenarios in Parafades that help us to know if we should even offer, when you're talking with a family, if we should even offer the appeal process. So when we look into Parafades, there's a lot of information in there about what has come from the FAFSA, as far as detailed information about income from the student, income from the parent, and how that EFC, the expected family contribution, has come about. In the FM data screen, so FM data, federal methodology, that means that's the information from the Department of Education that came through the FAFSA. FM data, this top screen, summary screen, tells us our EFC. Maybe you're used to seeing that in the packaging screen, as that is also there. But this screen is very helpful in determining where that EFC came from. If you're jumping in with a student and they have this total EFC of 0, and a 0 EFC cannot decrease to lower than 0. Usually when we're trying to go for an appeal, the biggest things that we're trying to get eligibility for is maybe get into eligibility for a Pell Grant, perhaps SEOG, perhaps some sort of recalculation of a need grant. So that's where there's some, or it may just be getting access to subsidized eligibility for a loan instead of unsubsidized. So it's, we have to have appropriate expectations going forward, like what is it that we're trying to accomplish when we're doing this appeal. So a student who already has 0 EFC has no reason to appeal because there's nowhere to go. 0 is the lowest you can have for an EFC. There's not going to be any additional need-based aid that a student is going to be eligible for if they already have a 0 EFC. This is where on the traditional undergraduate side, we have things like the Angel Fund and the reconsideration lists to try to look for some other types of funding when an appeal really is not a possibility. So this next situation is where a student maybe has a very high EFC. And this is the case where maybe like how much of a drop in income would really make a difference. So right now I'm still just looking at the top screens, and the next couple examples we'll be looking at down here in the parent and student, where this family may be making $300,000 a year, and they had changes at work, and now they're making $250,000 a year. And I completely get that in that family, that is a big deal to have a $50,000 drop in income. That's a big deal. I'm sure that impacts the things that they're able to do. That said, if a family is still in that $250,000 range, that is not going to decrease their expected family contribution significantly enough to get them eligibility for pretty much anything. So it's so that there's a balance in that conversation as well, of seeing how recognizing that it's a big deal for the family, but still that there's not a change that would happen to their aid eligibility. So that's one that can happen. When if you see a very high EFC, it would have to be a near complete loss of income to make a significant change.
Daniel, I have a question. Is there like a percentage we can tell families? I mean, I usually use like 50% or more if, an income loss, just as sort of a place to start. But should it be higher? Say this is like, I'm looking at somebody like this student.
Mm-hmm.
What is there sort of because sometimes when I say that, they're like, oh, well, then I guess we won't file the appeal because it probably won't matter. So I don't know.
Sure.
Higher?
And it's hard because it really depends. If a student is in kind of we'll get to one of these situations. In this situation, the student has $12,000 EFC. If this student had a significant income loss, it could very well put them into Pell Grant range. So it could be a lower percentage for a student that has a lower income versus one who already had a higher income, where they would take something more significant. So if I think your kind of 50% rule is reasonable if they already have a high expected family contribution. The closer they get into the $15,000, $10,000, $5,000 EFC, then the smaller difference can still make a difference. I don't know if that helps. Good question. I would love to have a rule of thumb, but these are very individual. It's tough.
Yeah, each person is individual because there's a lot of factors that go into looking at the income, because you have to look at number of household, number in college also. That also factors into it sometimes. So that's hard to say what a percentage is. It's just that you have to look at different things, and that's when you talk to an FAO to also look at that with you to determine if that's that's going to be make a difference, because most of the time it just may result in a subsidized loan. It may just result in they've already gotten every grant they had, so it just depends what each individual student looks like.
But my hope is that some of these scenarios will help give you an idea of when you look at a student and a family, that if you see this, then reference back to this presentation and say, like, this would be an unlikely situation where an appeal would do good, or this indeed would be a situation where the appeal would have a significant difference. So here's another one.
Daniel, I have a quick question.
Yes, go ahead.
In the chat from earlier when you were talking about the IRA rollover, it made me think about the current COVID rules where people can pull from their retirement. And I believe it's penalty free. Is that something that would have to be considered in a PJ, or is it kind of like a rollover where we aren't?
Interesting. I think that in that scenario, we would likely be able to consider that under the one-time income, and they would be able to say we only did this because of this COVID reason. So I can follow up on that when we get to the one-time income form. That is a good point. These are strange times. So this one, another one example with a very high EFC, 148,000. If this family came to us and said, you know, I was making $1 million a year and now I'm making nothing, I'm completely out of business, that would be very sad for the family, certainly. And we would think about it, we'd look at it, and we'd go into this screen and we'd show that down here in the bottom half of this screen, it shows what contributed to that EFC. So there's a parent column and a student column. So saying how much of this EFC was produced by the parent, how much of it was produced by the student. Naturally, if this was an independent student, it would only have information in the student. But it also divvies it up to what was the contribution based on the income that was listed on the FAFSA, and what was the contribution based on the assets listed on the FAFSA. So if this student had that grand change in income, if their family did, it would not have any impact whatsoever on their FAFSA EFC because their entire EFC in this scenario came from assets. Assets is a point in time calculation as of when they filed the FAFSA. So it is very difficult to make a change on an asset, on this assets that were listed. So really to try to appeal assets, a family would have to be able to prove that as of the date they filed the FAFSA, really they didn't have that many assets, which is a hard thing to do. So it's so determining where that EFC comes from can also be helpful in guiding a family towards which appeal process would be reasonable for them. All right. So this brings us to that kind of lower or mid-range EFC in the 12,000 range. We get to Pell eligibility in like the 6,000 or less EFCs. So we're thinking, well, I mean, it's a little far off, but it's a lot closer than that $99,000 guy. So if we're looking at this one, maybe there's something we could do some good. So if this family came forward and said, you know, our business closed, we're not able to do what we used to be doing, we could go in here and say, okay, well, how much of the EFC was really a part of your business? If it's the parent you're talking to, and we go into here, it already shows that $0 came from the parent. In this student's situation, all of the EFC came from the student. It was the student's income, it was the student's assets. So if the parent comes to us in this situation with an income change, it doesn't make a difference because the EFC is calculated on this student based on the information that was provided by the student. So that can be a key indicator as well. And sometimes there are assets in the student's name and those are assessed at a little higher percentage than assets in the parent's name. Sometimes that's the only thing that contributes to an EFC is just that student asset. So this is a great way to see where the EFC comes from, whether it's the parent or the student, and whether it's from the income or the assets. All right. So it's just another example of that, where in this example, the EFC came from the parent's income and the student's assets. So if even for some reason we could, there was a big change and we could zero out the parent's income, we'd still have this 1127 from the student's assets. So that would be a significant change, moving from their 9,000 EFC down to 1,000. That would get the student into Pell Grant eligibility. So it's still certainly worthwhile, but we're trying to drop down. If we think we're going to drop down to 0, it's probably not going to happen because of the combination that's going into the expected family contribution. So FM data summary, very powerful screen to determine the makeup of the EFC. So I mentioned this a little bit before, but As we're going into an appeal for a student, we need to have reasonable expectations of what aid could be added or adjusted as a result of even an approved appeal. So we're thinking a Pell Grant or hopefully the SEOG. So trying to get into Pell Grant eligibility is a common goal of some of these appeals. So that's one piece of it. Remember, the Pell Grant is a sliding scale. So the lower the EFC, the higher the Pell Grant amount. And it can be as low as a couple $100 if you're just making it into that Pell Grant eligibility. SEOG is another one that's a limited resource. We often run out of SEOG funding each year. And it's, we only offer it to traditional undergrad and ADC students. So that's not something, or Pell, that's not something that would be eligible for grad students, but it's a limited funding. So, and you'd have to get down to that $0 EFC really to be eligible at all for that SEOG and hope we have funding left. So that's a long shot to get into SEOG eligibility. A lot of times we're able to adjust the EFC enough to make to have more unmet need, and more unmet need in some situations allows us to add subsidized eligibility instead of unsubsidized. So it doesn't seem like a huge benefit at the time because it's not a overall increase of aid, but it is a benefit over time because subsidized is certainly the better loan, the best loan you'll ever get, a no interest loan. So subsidized is the better of the loans. So if we can give that to a student, we certainly want to. And then offering federal work study eligibility is a benefit as well. Again, it's more of a long-term benefit than an upfront benefit. So it's but those are possible responses to appeal and EFC adjustments. And sometimes we can have a need grant. So we've been looking at right now, especially for next year, as we have this percentage of percentage of an original need as a calculation for how we get to that need grant amount. Please correct me if I'm wrong, but we've agreed that appeals are a reasonable time to make an adjustment or a recalculation to that need grant, because that is legitimately just demonstrating that their need is different than what was originally displayed. So that's a time where we could look at a recalculation of that need grant. So on the traditional side. Okay, so I mentioned a little bit before that we were working to have one form that did it all last year and in prior years, really. Then we've kind of shifted to an idea of really honing in on the specific situation in specific forms. That has created a lot of forms, but we are hopeful that each individual form then is less confusing, less complicated, gets us to the right information the first time. So that is the goal of this. Marlon did a ton of work to make sure that we have examples of each of these dependent and independent versions, that they're all modified to make sure they're asking just the right information for these situations. And we are hopeful that this will be a helpful piece moving forward. This is really where it's very helpful for the family to connect with their advisor first, so they can be guided to the correct form for their situation. We are recognizing that some families may be in multiple situations. So we're truly trying to hone in on the one that is going to make the biggest difference. They can certainly file multiple appeals, but it's likely that one variable is going to be more impactful than another. So let's dive in. A change in family size. So each of these, of course, are 2 to 3 page forms, but I'm trying to jump in on on a highlight what makes them different. So change in family size generally is in response to some sort of separation or divorce. And in that situation, the change in family size, you're trying to exclude income of the divorced party. So that could have a significant impact if a spouse is no longer contributing income to the family. So we ask specifically, nearly all, I believe all of these forms ask for the clarification of household size. So that's a general form that all of these get into, as how many your number in family, how many your number in college. That seems like a weird thing to do in an appeal, but that is so critical to the calculation of an EFC that even your number in either of those numbers make a big difference on how the EFC is calculated, especially that number in college, because it almost exactly splits up the EFC between those who are in college if you have a differing number in college. So that's anything that's more than one. So that's certainly a big one. So a change of family size could be another student going to college. It could be a separation. So someone's exiting the family. And the things we're looking for at this point then is, okay, so what is your new household size and number in college? Tell me what's going on. That statement explaining your circumstances. If this is some sort of separation, maybe the legal paperwork or documentation at least that they're providing, that they're supporting separate households. Sometimes you have a separation, not necessarily all the paperwork filed yet. Copy of the last tax return and copy of all the W-2s. And the W-2s are important in that situation because if we are splitting out income, I'm gonna knock my tea over. Put it over here. If we are splitting out income, then we need to know whose income was whose. So that's the W-2s help us to see that. And then we have this kind of two different scenarios, which are both very possible in this situation. If the 2019 and 2020 taxes were filed jointly, then we need all this information. If the 2019 taxes were filed jointly, but 2020 were single, then just send us your 2020 because you've already split out the income for us. So, so that's a helpful thing. And once we get the information, then we know what to use moving forward. All right, that one's about change of family size. You can see how that could kind of be considered like an income loss as well, but the factor that made that occur was the change in family size, a separation or divorce. So death of a parent or a spouse. So we do have separate forms. One says death of parent, one says death of spouse, I believe. Again, the purpose of this would be to exclude income. So if a parent or a spouse has died, then certainly there's not income coming at that point. Again, another very sensitive and vulnerable time to be connecting with a family. We do, as with any appeal, we do need documentation to be able to make any sort of adjustments. So a copy of a death certificate or other legal documentation of death is required to support this appeal. And then the same type of income information so that we can help exclude the income that's no longer there. We were careful within this one, within the death of the spouse one, because it's, as with each of these appeals, has that clarification of household size. With the death of the spouse one, we were careful to exclude anything that referenced adding the spouse's name and also the spouse's signature. So we wanted to be sensitive of that. Loss of income. So this one is likely the most common and the most complicated. So it's because there's lots of ways people can have income. So there's not everyone has a standard W-2 job of wage earnings. That one probably is the most straightforward for what we can do to consider adjustments. But people have businesses, people have corporations. So there's lots of information that could be considered to help document changes in income. So naturally, the focus of a loss of income appeal is to adjust the income. So it was the tax year is very different than the current year. So we're going to provide information about what happened. So we have this gets into a lot of the flexibility that we have as an institution to consider these appeals. We can look at an academic year. So what the current academic year is. We can look at a calendar year, what 2020 looked like for this family. We can project ahead. Really, the goal is to help work with the family to have an accurate depiction of what their current income is, and to get them eligibility for any sort of need-based aid. So we can be pretty creative about what time period we're using to look at in order to most benefit the family and get them access to aid. So it's, as long as we can document and support the decision to use that, whatever income that they're providing, then we're good to go with how we make those kind of appeal decisions. So we can consider 2020 income, and we're anticipating a lot of that with upcoming appeals for the coming year, because we all know what 2020 was. It was some craziness. So 2020 is likely to be the year that a family would be able to submit information for and say, like, that was pretty bad. Maybe we're on the uptick now, but if we're looking at 2020, we're still digging out of that. And we can use that information as a new base year, essentially, to update the FAFSA and get new eligibility for need-based aid. So organized documentation is really key in this. There's a lot of different things that could be submitted to confirm income. And Marlon has done a great job in these forms, and with feedback from Brad and others, to kind of split out and try to walk a family through what information would need to be provided given their circumstance. So if they have a W-2 type of job, then submit that, your tax returns and your W-2s. Tell us when your job loss occurred, or when the change of hours or your shift changes, when that happened, documentation of that, and what your final income was. If you're self-employed, provide documentation for projected income, or what was done with 2020. And projected income can be a very challenging thing to do, both for the family and for us to kind of anticipate. So whenever we can use actual filed tax information, it's very useful to be able to do that. We will project if that's all that they have, certainly, based on a couple months of what income they were able to make, and then projecting forward based on that. There are other business corporations called more of a K-1 income, just kind of different schedules that a family may have filed on their taxes. So our more traditional business has that Schedule C. Other corporations have that K-1 and the Schedule E's. So you don't have to know all of this in order to tell a student or a family what to submit. So as a family is reading through this form, the family should know their situation of which box they fall under. So if they've never heard of box 3 of K-1 income, it probably doesn't apply to them. So they need to be able to supply the information that applies to them. So it's the attempt of this chart is to guide families in the right direction, so that if they're in any of these circumstances, they still know what they should submit. All right, gonna move forward after that one. One thing to note, as I have on the side, unemployment income is considered. So that is still income that the family had. So we will ask for unemployment benefits, and it's asked for on this form as well, along with the timeline of how long that goes. Question? Yes.
I did hear from my daughter's grandmother, she's an accountant, that they're not going to count like $10,000 of the unemployment income on our taxes. Is that something that we're not going to consider either, or we're just going to go based off the taxes?
I know unemployment income can show up on the taxes. We would generally go with statements from EDD, so the actual unemployment stubs that they get in the statements from them. I haven't seen any guidance saying that we could exclude that, but if something like that comes out, I'd be happy to share.
Okay.
If it's on the taxes, we have to include it. But if
Sure.
it's not on the taxes, it's going to be considered untaxed income. But like Daniel said, we haven't seen guidance on if we're going to consider that as untaxed income.
Right.
Because this was something new, and I know that the tax, you know, with taxes and stuff like that, and that will mainly affect the 2020 taxes. It's not going to be in the 2019 taxes.
Mhm.
So we have to figure that out or try and get some questions answered for that question because we don't know.
That's a good one though. Yeah, we'll watch out for that. Thanks, Mark.
Okay.
Medical and dental expenses. So this is a rare exception where some sort of expense can make a difference on a EFC. So that's when this is another one where documentation is key. So there are situations where a parent or a student themselves have ongoing treatment for some sort of illness and you know, astronomical bills because of that. We would need documentation of that. So this is not talking about health insurance premiums. So it's not the cost of health insurance. It's actual out-of-pocket costs that the family has incurred based on whether it's medication or hospital visits or whatever other specialist expenses that they may have had. And this is another one where it only makes a difference if there's enough of it. So it's a hard line for this one because you're already allowed to take some deduction of extraordinary medical expenses as a deduction from the taxes. So this would have to be something that's kind of above and beyond what you've already been able to take out of the taxes. And it's possible. So if there are some extreme expenses and there can be documentation of bank statements or bills or for each of those expenses, and then how we put it here, an itemized spreadsheet of expenses. That really is ideal because if you wouldn't go to your tax preparer and just hand him a box full of receipts and say you figure it out. I would hope you would not do. So that this is something where if there really is a need for this, then you need to be able to come forward with documentation in an organized fashion and a summary page of this is what it all totals out to. And we'll look at the summary page and we will go in and make sure that there's documentation for each of those items. But we're simply not able to do that summary for every student if they're submitting just a whole bunch of odds and ends.
Daniel, do you have an example of one of these that you've done where it did make a difference?
Brad, can you take that one?
Well, we've had some, but the thing is that we have to take 11% of the AGI to determine if the person is exceeding their taxes. I mean, exceeding their income. So usually the formula is 11% of the AGI. And then if it falls below that 11%, then we don't consider it. So like let's say they did 20,000. Well, I don't know. I gotta figure out the math, but we take 11,000. So if they submitted 20,000 worth of taxes and 11% is 29,000, then it doesn't exceed.
Okay.
And then, or if let's say it's 18,000, then we'll take not 18. If it's 18,000, 11%, then we'll take 2,000 as expense. That's over, and that probably will not make a difference either. So, but it just depends. It has to be extraordinary because that 11% is the key. So if it exceeds 11 but if the 11 is only $1,000, it's not going to do anything, you know.
It's another one where
Just to let you know on the taxes, on the receipts, we want copies of every receipt, but we know that people lose receipts sometimes. And if there's like 200 itemized items, we don't want to we'll rely more on the spreadsheet than the receipts, because 200 receipts and trying to find 200 receipts and adding them all up is a pain. So if they don't submit all 200 receipts, don't worry, we will use the spreadsheet to help, look at those expenses, because some of those receipts are like $6, $3. They're all little tiny ones. It's like, and
Yeah,
we do say we want every receipt, but the thing is that if there's receipts that they're missing, tell them not to sweat it, because, unless it's a large amount, like if it's a $5,000 receipt, I want that $5,000 receipt. I don't want a $3,000, but if they're missing a $3 receipt, I don't want a $3 receipt, for them to look for it.
So it really needs to be enough documentation to legitimize their claim of the expense.
We're looking for the larger, more expenses than the little piddly ones that they submit sometimes. It's because it's a pain. Daniel says that some people do just drop off boxes of receipts and expect preparers to do it. But we're not preparers, and we don't have the time to go through every single receipt.
And they use bank statements with highlighted the information, Brad?
But they have to make sure it's clear that that's what it was for.
But if they have the spreadsheet and the bank statement.
Yeah, but the thing is, we have to try
that's
to corroborate all that. That's the hard part about medical expenses. Are not fun when we have to review all of them.
Well, they're very detailed appeals. Yeah.
And that's why that's how come we have told advisors at some point that don't worry about some receipts, because if it's a major cost, yes, I want those receipts. But if it's something like they bought aspirin or they bought something, to show that that's something I don't want. They don't have to go looking for it.
Yeah.
Because it could be on their Target receipt, mixed with all kinds of stuff.
Right.
So.
All right, one-time income. So this would be an example where the focus is to adjust income. So they're saying that we got a one-time thing, and that's not going to happen again in the future year. So sometimes this is a court settlement, or life insurance, or the lottery. It could be a number of things where there's a one-time income that they don't anticipate happening again. But more challenging part is if they pulled one time from their IRA, from their 401k, and they would have to be very specific about what that was used for in order for us to be able to support an appeal saying they wouldn't do that again. So the example, I think it was Adriana who brought that up before, of if they had to pull from that so they didn't lose their house because they're not working, that's probably a one-time income and an income adjustment appeal. So it's that person may do some sort of combination thereof. But if they did use that one-time income to pay for educational expenses, that is a hard appeal to approve, to say that they wouldn't do it again. So this is, and then as noted in the top of this one, this is not for IRA rollovers, as we mentioned, that, or certain types of conversions. We mentioned that's just moving from one account to another account. It may show up on the tax forms, but that's more of a correction to say, no, this just went somewhere else. This wasn't actually income I got.
But to answer Adriana's question, it doesn't matter whether they're charged a penalty or not. It's whatever shows up on the tax return.
It's true.
And so the penalty, or the penalties that they're drawing penalty free, if it shows up in the tax return, then it's considered one-time income and it's considered part of the appeal. But regardless of whether it's a penalty or not, I mean, they're being charged one. It's whatever's on the tax form. But in the one-time income stuff, it's basically they have to show proof, and usually it's an itemized thing that they have to do sometimes. So I know there's always a lot of questions of how they do that. But the thing is, it's just a list, itemized lists, and showing how they made where it went to. They have to count. They don't have to count for they just have to count for the expenses as much as possible, because it's hard to do when you're trying to do groceries. You're trying to do other stuff too. It's just, I just remember one time when a parent said that we got this one-time income, and they didn't, they said they used their regular income to pay for education, and all the other stuff was used for living. But that does not, we actually denied that appeal, because technically, you know, your income is for living, your one-time income is for any other expense. So, and that's how they framed their appeal, just to let you know.
I
So,
get why they would do that. But, so yeah, that one is a little more unusual. Parent in college happens sometimes, as the FAFSA tells you not to include a parent who is in college. But the schools can go ahead and say, oh no, that really does impact you. That is the focus of that change, is to adjust the family number in college calculation, which can have a big impact on the EFC. Official documentation is key on that one. So on that parent in college form, it has the college verification where someone from that college has to be saying that they are enrolled at that time in some sort of program, at least half time, I think it says. So official documentation is key on that one. Independent status appeal. So this is a big one and can certainly make a big change. Another one that's very difficult to prove. So it's a student who is currently seen as dependent, but wants to be considered independent. It doesn't qualify based on the traditional age, veteran, married, dependent, those kind of questions on the FAFSA. So this would be where there is some sort of adverse home situation where they cannot be dependent on their parents. The focus of this appeal is to adjust whose income is considered. So we don't have to ask for a parental income. We're just looking at the students. External documentation is key. So we do ask for their own statement to say what's happening, but some sort of third party recognition that that's what's happening with this family. So it could be a minister, a social worker, a teacher, someone who's familiar with the situation outside of the family. There can be a relative also to be used as additional documentation, but there has to be some sort of third party source. And unfortunately, really, it's so that it's not a fraudulent situation. So we're trying to avoid the family who just doesn't feel like paying for the school, so they've decided that their kids cut off. That's not necessarily an adverse home situation. So there have to be some significant documentation in order to get an independent appeal. So as we mentioned before, are there other options if the appeal doesn't result in what you're hoping for, or if they're really not an appealable situation? And for traditional, yeah, we have some other options. We have that reconsideration list that we're trying to pair up named scholarships that we've saved for high need situations. We still have that. We do have the Angel Fund. There's continued funding within that program for some real extreme situations, and those tend to be some high dollar amounts that students are needing. We don't have Crossroads funding anymore. That program did run out of funding. We do have the income share agreements, the ISAs for our graduating seniors. That's a $10,000 item that can be added on. Yes, it needs to have payments after graduating, but as a great resource that is available for students. We do still have those available for this year and moving forward. And nursing loans. We do still have nursing loans available to our junior, senior nursing students for both traditional undergraduate and GPS. So we do have those nursing loans that are still available. So there are some additional resources. And as always, we always encourage our students and families to look through our scholarship sites. Generally, our deadlines, we try to have March 1 as a deadline for a fall spring or a spring only. And October 1, I did a little backwards. October 1 is a fall deadline for a fall only. This year, given our adjusted traditional semester, we feel like we really need to advance that deadline. So March 1 already passed. We're still in the thick of the semester. We really want to move that to May 1 for this year. So we are still accepting appeals for current students in the 2021 year. So I threw a few resources. Did you know we have a special circumstances informational page on our website? We do. It's so it's I think there's more information we could put there, but we do have that. There's a resource to that. There's some background on how the Department of Education is encouraging schools to use our PJ authority. So I put a link to that. And then also links to our PJ self-study guide. We have a lot of great NASFA self-study guides on the server in this location, training calendars and materials. So there's a great one about PJs. If you have a couple hours on your hands that you're wondering what to fill with, self-study guides are awesome. There's a lot of good information in there. So we have those resources. And 1 minute over, but that was a ton of information. Any questions or feedback, I'd be happy to respond to some now or later. If you have questions, I'd be happy to talk through that later too.
I just made a note in the chat. Right now, the special circumstance webpage that's on the website still has, from the last time I checked this week, was 2021 forms. And then the Appeal and New Forms page has both. So if you are referring a prospective family or someone in the 21-22 academic year to that special circumstance page, just note that it's this current year's forms, not next year's forms.
We should probably get next year's forms on that page too.
I think the web page needs to be reviewed still, because I think we still have a lot of 2021s and we have updated stuff.
Yeah, which I think right now is still kind of relevant and important to keep in there, especially if we're extending the deadline. But I think it might be helpful to still get 21, 22 there.
Because new students are going on our webpage now too, so we have to figure out when we're going to set a deadline for that, actually, to get it done. So are there any general questions on PJs? If you want to go over specific situations, I could be available. Daniel's available too, that you may have. But
And Andre's doing PJs now too, so we're all happy to be talking through them. When will we start accepting 21, 22 PJs? That's a good question. We've already done a couple for next year. So as if that's a GPS specific question.
Yeah, we started some already. Jenna and Andre are the ones reviewing them and stuff.
So I think we've completed 2.
And some have been completed and some are still in progress.
Yeah, and for GPS, I don't see why we couldn't accept any early and work on that too, if they already know that their income situation is much different.
It's just they have to be in paraphrase, right, before you do it. Or they are in paraphrase.
They are in PowerFades. We already did our first round of packaging, so
Yay.
we're on our way.
Yay, GPS.
All right, well, thank you so much, guys. I think PJs are one of the things for an office like ours. We really like things that are very, very black and white. And I think that we try to keep these as black and white and as standardized as we possibly can, but it's just one of those depends situations. And so it's about as much fun as, doing your taxes. It's kind of one of those very meticulous parts of the job of the financial aid officer. I think it's really important on the advising side to manage expectations so that these people aren't thinking, oh, I'm doing an appeal. It's really objective. They're going to really, and we do care about stories, right? We want to be empathetic toward whatever situation they find themselves in, but it's not a matter of my student works so hard, and so you should consider this. It is pretty objective for being one of the more gray areas of our job. So to really help them understand what we're trying to do, what might be possible. And this is not about the big bag of money in the corner that we're going to go be able to access. Probably would help the financial aid team.
Yeah, and to add, with Jenna gone now, we're short staffed basically. So we need to work together because we have to figure out the turnaround times, and if we can, at least on the undergrad side, and we have to communicate to make sure how the PJs are getting done in a reasonable time. But what Daniel and I get later on, and Andre will be meeting about turnaround times for different things for this period when the Jen is gone. So we have to figure out how different things are going to look like. So stay tuned, I guess, Daniel, is that right? So, there's going to be,
Yes.
we're having our workflow meeting today, and we're going to look at that, how we're going to process PJs in a timely manner for you guys. Because I know we keep getting emails saying, when is this done? When is this done? It's might be longer, or might be shorter, depending on how we look at it.
Yeah, and having a good, once you guys know, please let us know so that we can use that to also help manage those expectations. And if there's anything that any of the rest of us can do to assist, making sure that things are filled out completely, making sure that all the documentation in the section of the PJ they're doing is also submitted, is going to really help them. That shouldn't all, you guys know this, but that shouldn't all fall on Martha and the FAOs to do. So
And give
All
us
right.
your input too. Give us your input, if you, as much as possible too.
absolutely. All right, guys. Well, we're a little bit over. I want to let everyone get back to work. Thank you so much for taking the time. Really important training today. So happy Friday, y'all. Have a good day.
Bye.
Thanks,
Thanks.
Daniel.
Thank you.
Thank you.
Bye bye.